Given the history here and just the sheer size of the U.S.-China economic link, any movement, positive or negative, is going to have pretty big global consequences. We don't need the exact list to know it's important.
Fair enough. So even without that detailed agenda, let's talk broad impact. How might these negotiations, just the fact they're happening, affect the global economy and stock markets?
Yeah, think of it like maybe a mood swing for the market. If we get positive signals, hints of de-escalation, maybe easing tensions, that could boost investor confidence.
Okay.
We've seen before that when trade friction eases up, well, global growth forecasts tend to look a bit better, and markets often react positively, especially, companies tied into global trade.
Makes sense. But what about the flip side? If the talks stall or get heated?
Then you could see that mood swing the other way, more uncertainty. That often translates to worries about slower global growth, maybe some downward pressure on stocks.
People remember the last trade disputes, I guess.
Exactly. The impact on supply chains, prices, that memory is definitely still fresh for a lot of investors.
Okay, let's zoom in a bit. Specific investments. Gold always comes up when there's this kind of uncertainty. What's the potential play there?
Well, gold's interesting, isn't it? It's that traditional safe haven. So if these talks make people nervous about the economy, about stability, we could see more demand for gold. Investors looking for somewhere safer to park their money, that could potentially push the price up.
But if the talks go really well,
then maybe the opposite. If confidence returns, that safe haven appeal might fade a bit. Less need for that security blanket, so to speak.
Right. What about oil? Energy markets must be watching this closely too.
Oh, definitely. Oil demand is very closely linked to global economic activity. Simple as that, really.
So good talks, better economy, more oil demand.
That's the general idea. If the negotiations smooth the path for stronger global growth, you'd expect oil demand to pick up. But if they spark worries about a slowdown,
then demand could drop.
Got it. So keep an eye on economic data alongside the trade headlines.
Precisely. Manufacturing numbers, overall growth forecasts, they're all part of the picture.
Okay, now for something. Well, known for its ups and downs, Bitcoin. How might that react?
Bitcoin. Yeah, that's a really interesting question, isn't it? How does it behave when the wider market sentiment is being swayed by something like this?
Volatility is kind of its brand. It is. And this kind of uncertainty could easily amplify that. You might see some pretty big price swings. It really depends on the narrative that takes hold,
Like, is it seen as a hedge or just too risky?
Exactly. Some might view it as like a decentralized thing, separate from the economic turmoil. Others might see it as a risk asset to sell off when things get choppy. It could go either way.
Okay, last one. Real estate. Seems a bit further removed, but is there a connection?
There is, though it's maybe more indirect. Think about overall economic confidence again.
Right.
If positive trade news boosts confidence, supports growth, that generally creates a healthier environment for real estate markets, too. People and businesses feel more secure investing.
And if things go badly?
Prolonged uncertainty, worries about the economy, that could make investors more cautious. It might dampen demand, particularly in areas sensitive to international business or cross-border investment.
So quite a lot of potential ripples here across different assets. What's the main takeaway for you listening and trying to make sense of it all?
I think the key thing, really, is just careful monitoring. Keep a close eye on the news coming out of these negotiations. Especially, the source material suggests watching closely leading up to the end of July.
Don't just read the headlines, though.
No, exactly. Look beyond the initial reports. Watch for the actual policy changes or actions that follow from both the U.S. and China. That gives you a better feel for how deep and how long-lasting any market reaction might be.
Right. So stay informed, watch the policy. That seems like solid advice.
It really just underlines how interconnected everything is in global finance, doesn't it? Talks happening over there can have these complex, far-reaching effects everywhere.
Absolutely. And that brings us to a final thought to leave you with. Considering just how linked all these global markets are, how might these seemingly specific trade talks between two countries end up having unexpected consequences? Maybe even surprising ones?